Welcome everyone to Vested Interest. This is Shane, and on this video today we are going to cover the $1,802 that we added to the portfolio. But before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. For those of you who may be stopping by for the first time, on this channel we focus on dividend growth investing. It's not rocket science. In my opinion, the best way to do anything, keep it as simple as possible, so it really boils down to consistently investing, dollar cost averaging into dividend growth stocks and growing companies with positive cash flow that covers the dividend, and companies with a high return on their invested capital. I do cover all of my investments into the portfolio on a weekly basis. Again, that's what this video today is about. I do not have a paid Patreon account. I do not have any courses I'm trying to sell you or any other sites that you need to visit to enter in your credit card to see what I'm doing. I have secret links, so you can join me on my super special Discord to find out what I'm investing in. I do everything out in the open on this channel. We all have enough to pay for. We all have enough bills rolling in, and I am not a professional, and I don't believe in charging people for things that shouldn't be charged for to begin with. But if you would like to help me, if you could do me a favor before we get too far into the video, go ahead and drop a thumbs up down below. Let me know that you appreciate the videos. Make sure you are subscribed to the channel. Join us on this journey to financial freedom. Join the vested interest community. Make sure that notification bell is clicked so that you can be notified whenever we put out any new content. We do a stock pick of the day series every Monday through Thursday whenever the market's open to cover a stock that's pulled out on the day. I do viewer and subscriber suggestions for some of those as well. So if you have a company you'd like me to cover in that stock pick of the day series, go ahead and drop that down in the comment section below. And then again, make sure the notification bell is rung so that you're notified whenever we put out that video. And again, really do appreciate all of the people who've taken the time to watch, comment, and most importantly, subscribe to the channel. It really does help push out these videos a little further. What helps also is everyone out there watching to the end of the video, or at least a little bit more than you normally do. The watch time is another one of the metrics that the YouTube algorithm looks at. They're looking at those thumbs up. They're looking at the people who've subscribed. They're looking at you clicking the notification bell, dropping comments. They're also looking at your watch time. So help me out a little bit more and make sure you're watching the videos in full. And now that I've made that little plug here, let's get back into the video. And again, thank you all for the time that it took you, a couple of seconds to do all of those things. Now we are going to jump into the options to start out the week. We did have one options play hit, and I want to start out. I know I say, I put out a lot of options and don't get a lot of hits, and I just wanted to show you these are the options plays that I put out for the week. You can see CVS here, Cisco, Pfizer, Kraft Heinz, Nutrien, 1, 2, 3, 4, 5 different options plays I tried to get into, and we only had the one CVS covered call hit, so let's cover that one. So it did expire on Friday the 19th. We entered into the contract. It was a sold to open contract. That's what I do. I do covered call or cash secured puts. So I'm always selling covered calls or selling cash secured puts. I'm not buying any options. I know some of you out there might be buying options, but that's not what I do on this channel or in my portfolio. I may do that in the future, but just not right now. I don't have the time to kind of watch stocks that close to be able to do something like that out a year or out 3 months or out 6 months like some people are doing on leaps and some other options plays. But anyways, this was a covered call, so that means we own at least 100 shares of CVS, and that -1 means -1 contract, which is a total of 100 shares. CVS being the company that those shares are in. CVS is out of the healthcare sector. Again, a covered call, that's what call means. And it's covered because I own the 100 shares. Opened that on July 15th with an expiration date of July 19th. And the strike price was $61. So that means if it would have been $61 or above, then those shares would be called away, right? That's what that call means, a covered call. So they'll take and call those shares away, and they go to whoever bought this contract. Now for that, I did receive, 31 cents per share, but then they take out a little bit of fees here. So total, we received $30.45, which is what you see up here in the top. And those funds automatically go right back into the portfolio. So I use them as part of what you saw there, the $1,800 we invested this week. That's part of that funding. But again, here you can see the ones we were, well, let's finish this up. It did expire out of the money, so it was below $61. So we keep those 100 shares, and then we may just continue to run this wheel next week as well, do another covered call. maybe increase the strike price since it did get above 60, I think, or right around $59, pretty close to $60. Actually, at some point in the week, it was above 61, so I thought this one was going to be called away, but then the market dropped a little bit towards the end of the week, so it did not. And then again, you can see here, CVS, we tried to do a strike price at 61. That's the one that hit. And then Cisco, we tried to do a strike price at 48. That one didn't. Pfizer at 30. It ran all the way up to 29, didn't quite get to 30, so that would have been a good one. Kraft Heinz, 33. I think it stayed down under 32, so that would have been a good one as well. Nutrien stayed under 51, so that would have been good. But no one bought any of these, so we'll just move on to next week, and these will probably be very similar. They're very similar to what I put out last week. They're very similar to the ones I put out the week before, and they will probably be very similar to the ones that I put out next week. Now you can see here I did not do one on Johnson & Johnson. I thought we were dancing with the devil a little bit, I'll say, on the last couple weeks on that one, so I did not do a Johnson & Johnson covered call this week. I may look at it. It did run up a bit, I think into the mid 150s, so I'm glad I didn't. It definitely would have been called away. I was looking at it in the low 150s, 151, 152, I think maybe even 153. Still gave us a little bit of premium, but that one was such low premiums that I didn't want to go any higher than that, so I'm glad I didn't. But we may still look at these ones next week. We'll see. Let's keep going here. We had a pretty good week in dividends. We did receive $243.70 in dividends. They all came in on July 15th. So I want to talk about BABA first, Alibaba Group, ticker BABA. This is out of the consumer discretionary sector. This is a Chinese company as well. So there are some fees or some taxes that were around this that my brokerage takes out right away. That's why I snipped this top part where you can see dividend. It did pay out $179.28. My bank takes out the taxes right away, so we really only reinvested $177.12. So the 243 is the 177 plus the 66. It's not this 179. So even though we were paid out 179 in dividends, I only count what's reinvested as the dividends received, right? Because that the additional funds, the difference between the 179.28 and the 177.12 will be held in my account for taxes. We did receive $177.12 from BABA, and we have the drip set, so those funds go right back in. Whichever company pays out the dividend, they go right back in this case BABA, and pick up more shares of that same company. So that 177 picked us up 2.25721 more shares. Realty Income also paid us out on the 15th. They paid us $66.58. Same thing, drip set. So we go right back in and pick up 1.19342 more shares of Realty Income. And Realty Income is the monthly paying REIT out of the real estate sector. I know a lot of dividend growth investors are very familiar with this one. This one has really run up. You can see here early in the week, we bought those shares at $55.78. Now, I can tell you by the end of the week, I think it was at $58 or even $59 per share. So a lot of these companies have really run up. I'd like to add a little bit more to Realty Income before it really rebounds. Hopefully, we get an opportunity next week. We'll see. With the news that the rates are going to be lowered, REITs are probably going to be a beneficiary of that, right? They are really dependent on interest rates. Now, these new shares, the dividends of $243.70, and the new shares they picked up here added an additional $7.50 in passive income. And then I say this every week, this is what is referred to as the dividend snowball. You'll hear some people say that. So the dividend snowball, it grows in a few ways. First of all, it grows with the capital you invest, right? The money that you use to buy, whether that's from your job or a bonus, or maybe you did a side job, maybe you got an inheritance, maybe you won the lotto. That's the money you invest, and that's what you see here. So I owned shares of BABA and O, right, from the money I invested. These shares pay out dividends, and those dividends, if you have the drip set, buy more shares, or if you don't have the drip set, you can reinvest it yourself. But then those dividends buy more shares. Those shares add additional capital. That is the dividend snowball. Now, the other part of that snowball is as these companies increase their dividends over time. That's why you want companies with growing dividends, because that will add to that snowball effect as well. So that's what when you hear the dividend snowball effect, that's what it is. You buy shares, those shares pay out dividends, those dividends buy more shares, and hopefully those companies in the portfolio increase their dividends over time as well. That's the ways the snowball grows. And then the last way the snowball grows is just time, holding those shares, letting those dividends compound over time. And then that snowball, just like rolling a snowball down the hill is time. The longer the hill, so the longer the time, the bigger that snowball will grow. Even if you don't add any more capital, right? These dividends will continue to pay out even if you stop adding new funds yourself. Now here we get to the new buys for the week. First ones happened on July 15th. So now typically this is what we do. We go in and we do our options plays for the week, and then we invest some capital where we see a little bit of fun, a little bit of pullback in the positions we want to invest in that week. So that's why I always have this broken up into two different buys. So we did add $1,410.29 into the portfolio. With those funds, we picked up 2 more shares of Cisco Corp, ticker SYY. This is out of the consumer staple sector. We picked up those 2 shares at $71.85. Been nibbling on this one the last couple of weeks. I like it down in the low 70s. I'd like to continue to increase this position. I like Cisco. I'd really like it to drop under the 70s and be slightly under my cost basis, but this is pretty close to my cost basis. It may be a little bit over. But I'm willing to buy it here because it's under where the company sits at 15% of its 52-week low, or at least where my cost basis would be if I continue to add. So I wouldn't mind nibbling a little bit more, even though I think this jumped up into the $73 range. A lot of the companies in my portfolio have really run up the last couple of weeks, which is nice to see, but then it also starts limiting what I'm willing to buy. Now, we've been adding to our Starbucks position for the last several weeks, since May, actually. I think the last couple of months, few months. We've been adding to it. We are over 100 shares now, so we may start being selective, because this was another one that really ran up by the end of the week. I think by Friday it even jumped up by like 5 or 6%. But we did add 4 more shares to our Starbucks position, ticker SBUX. Picked up those shares at $74.24. We did add a little bit to our BABA position, ticker BABA, Alibaba Group here, the same one that just paid out dividends. We added a couple more shares there, picked up those shares at $77.74. And BABA is out of the consumer discretionary sector. Again, Chinese company here, so there may be some tax implications, and you want to understand those. Make sure you understand if your brokerage takes out the taxes, or if you are going to be have to take care of those taxes at the end of the year yourself, right? So you want to understand that. And that goes for some other companies you'll see in my portfolio too. I have some companies from Canada as well. I've got one from Brazil, Vale mining company. I did just sell Sibanye-Stillwater, which is an African mining company. But I do have some positions in my portfolio that there are some additional tax implications because they are foreign companies. Again, I invest with Ally, so they take the taxes out for me. You want to make sure if your brokerage takes them out, no biggie. If your brokerage does not, then you are going to be responsible for them at the end of the year. Kraft Heinz, we did add to our Kraft Heinz position, ticker KHC, out of the consumer staple sector. Picked up 10 more shares there at $32.05, just too cheap not to add to it. And it does, even if I decide to sell this in the next couple of years because they're not increasing their dividend, this will decrease my cost basis and hopefully increase my potential future returns. It also lowers my cost basis and increases my dividend yield as well. Added 4 more shares to our CVS, so CVS Health Corporation, ticker CVS, out of the healthcare sector. So not only did we run an options play on this, we're still adding to it, right? We picked up those 4 shares at $59.67. So that gives you an idea of what I thought about where CVS was headed. I was willing to, even though I was buying it at $59.67, I thought it would be pretty close to there at the end of the week. I thought it might be in the 60s. And this is around where it ended the week as well. So I was pretty good at estimating that one, at least for CVS this week. Because my strike price, again, if you remember, was only $61. So it didn't have to go up very much for it to be in the money. But it didn't, so it worked out all right. We picked up then 4 more shares of CVS at $59.67. Continue to add to that position. I think we're over 200 shares there. So we might nibble on this one a little bit, but we're not going to add a significant amount. We've got some other positions we want to show some love. And one of those other positions is Haverty Furniture Companies, ticker HVT, out of the consumer discretionary sector. We picked up 10 more shares there at $25.50. This is one I would not mind adding 10 shares a week for the next several weeks while it's pulled back significantly under my cost basis, especially if it stayed down in the 25, 24, 23 range. I think my cost basis is in the 27 or even 28 range. We'll see that here at the end. But these new positions, the $1,410.29, and the new positions added an additional $55.96 in passive income over the next calendar year. And we weren't done. We did our weekly buys, the 2 ETFs plus a little bit of funds we had left over. We purchased a couple others, but we added $392.03 on July 19th, which was Friday. I'm going to go in reverse order. With those funds, we picked up VTI. This is the Vanguard Total Stock Market, ticker VTI. And I'm buying this weekly. Regardless of what the price is, I'm going to pick up at least one share of this ETF every single week. And that goes the same with SCHD. This is Schwab Strategic Dividend Growth ETF, ticker SCHD. We picked up that one share at $81.69. This was really rebounded, right? We were getting this in the 70s, low 70s, mid 70s. Now it's back up into the 80s. Like a lot of the value stocks, dividend stocks, it's really come up because the dividend stocks have really jumped up over the last couple weeks. So these two are part of our weekly buys. And we're going to buy these regardless of what the market is. Now, if they drop down significantly, like if Vanguard was a drop below my cost basis, I would probably double up on this, maybe triple up on it for a week or two. SCHD, same thing. If it was to drop significantly below my cost basis, which you've seen, I have doubled up on this a couple times when it did drop below my cost basis. And when I sold out of Siboney-Stillwater, I actually added a significant tranche here, I think 5 or 7 shares total when it was still in the mid 70s. So I like these positions. I'm going to add to them. And whenever the market provides better buying opportunities, I probably will buy more than one share, but I'm going to at least buy one share every week. Now, we had a little bit of funds left after our purchases, so we picked up 3 more shares of Vale, ticker VALE. This is the mining company out of Brazil, and we picked up those 3 shares at $11. This one actually dropped down into the high $10. I think $10.98 or $10.96, somewhere in there is where it ended the week. So this is one I want to continue to build out as well. It's only, I think, around 2% of my portfolio. Wouldn't mind getting it to 3.5% of my portfolio. So this is where I'm going to be adding some capital as well. And we added 1 more share of Medical Properties Trust, ticker MPW. Just had a little bit of extra funds, didn't want it to sit in the account because I don't get interest in my account in Ally. That is one of the things I don't like about Ally. If the money is just sitting there waiting to be invested, I do not get interest on it. So I don't like to leave a lot in my investing account. So we had a little bit left, so we added 1 more share to our MPW. This is a REIT out of the real estate sector, and we picked up that 1 share at $4.67. The $392.03 in the new shares that it added to the portfolio added an additional $10.35. We did have a total of $1,802.32 invested, which added an additional $73.81 in passive income over the next calendar year. Now we're going to jump over to the sector weights here, how the portfolio is broken down. Communications makes up 9.91% of the portfolio. Consumer discretionary sitting at 7.42%. Consumer staples at 9.44%. Energy makes up 5.91%. Financial sits at 6.12% of the portfolio. Healthcare makes up 14.22%. Industrials at 6.46%. Technology makes up 6.98%. Materials at 8.80%. Utilities makes up 9.65%. REITs and real estate still sitting there in second place behind healthcare, makes up 11.15%. And the smallest sliver here, the ETF sector, is at 3.94% of the portfolio. Now, eventually, I think this will overtake the rest of the positions in the portfolio, but it is going to take a while. It is starting to get built out a little bit here, but it still remains to be the smallest position. Now, this is it. This is what a lot of you like to see, and I show it every week. I'm going to be fully transparent out on this channel. I want you to see a real portfolio built out over time so you can understand the ups and downs of the market, the ups and downs of positions as they go through time. Sometimes they're up, sometimes they're down, sometimes they're on runs, sometimes they're pulling back. Whenever I see red in my portfolio, these are all buying opportunities. Now, just because there's green in the portfolio, that doesn't necessarily mean they are not buying opportunities, but it does make me pause a little bit and reevaluate how much I'm paying for them and do they still fit in the buy basket, right? Owens Corning, for example, you can see here I'm up 87.09% It is hard for me to add to that over some of these other positions that I feel are showing more value. But eventually we will add to it, right? Especially if it was to pull back. Let's say this pulled back again. At one point this year, it was only up about 30%. I probably should have been adding to it then, but it was still up 30%. But my cost basis is so low on this one. Average cost per share at $92.35. And where it sits at 15% of its 52-week low, $126.44. So I could add to this and bring up my average cost per share a little bit, so long as I keep it under this $126.44. So this one, if it was to pull back, like I said, into the 70s, into the 60s, maybe it pulls back into the 160, 150 range, I may nibble a little bit, even though it is up significantly. So just because you're seeing green does not mean I would not add to a position. But again, I do want to show this fully transparent. There's nothing to pay for on this channel. I will show this every week so that those of you who are new investors can see the ups and downs of a portfolio, ups and downs of the market over time. And those of you who have not started your portfolio, hopefully it gives you some confidence to get started. Someone who is not a guru, who's not a financial advisor, someone who hasn't gone to college for this, like I have not. I'm just like you. I'm an average person, come from a relatively poor family. Actually, neither one of my parents graduated high school, and I grew up in a double wide trailer, believe it or not. So if I can do it, you can do it. It does take a little bit of time and research. And if you're not willing to do the time and research needed, then I would just stick to the ETFs, like VTI or SCHD or something like VU, which is the S&P 500. And then you just buy every week, regardless of what the market is. Just consistently buy whatever amount you can invest. So you don't have to do the deep dives into the individual stocks like I do. You can stick to ETF investing. Again, I would recommend, and Warren Buffett would recommend, VOO, which is the S&P 500. Even though I don't have it in my portfolio, I like VTI a little better because it includes the small caps, mid caps, and large caps, whereas VOO is just the large caps, the largest 500 companies. But anyways, the ticker here, you can see all the different individual positions here in this column. Total shares I have of each. Current price as of the close of business on Friday. Market value as of the close of business on Friday. My average cost per share, how much I have into each position. Whether it's up or down, you'll see here how much it's up or down and the percent up or down in this column. What sector each individual position falls in, whether it's a quarterly, monthly, semi-annual payer. And yes, there are some here that are not semi-annual, like BABA, for example. Yes, they are going to pay out twice this year. But I actually only have this set as a annual payer, one dividend, because they only announced one dividend, and then after that they announced a special dividend. So I have this set up. If you were to click here on this, over here on the estimated annual income, you would see that it only estimates $1.66 times 1, right? Whereas this down here for Valet, it goes 0.54 times 2 and does count it as a semi-annual payer. But I'm not going to add another column. It starts to make this a little smaller and hard to read. Current yield as of the close of business on Friday. My yield on cost, so this is my yield. It's based on my cost basis. Estimated, and that's why there's a difference, right? For example, Ally here, my cost basis is only $25.70. It's at $41.86 current price. So my cost basis is a lot higher than what you get, or my yield on cost is a lot higher than what you get for a current yield if you were buying this, right? I'm getting a 4.6% yield on because I bought it so cheap. So that's the difference between, if you're wondering why the numbers are off. Portfolio weighting. So what we saw on the previous slide was the sector weights. This is for each individual position, and I don't like any individual position to be more than 10 to 15% of the portfolio. I don't like any one sector to be more than 20 to 25% of the portfolio. Estimated annual income in this column, what months they pay out, dividend growth year over year here, and where it sits at 15% of a 52-week low. We kind of talked about that with Owens Corning, so I won't beat that to death. So total shares currently in the portfolio, 6,431.217 shares. Market value of the portfolio, $275,177.90. Purchase price, this is how much I have into the portfolio, $256,706.21. This does include dividends, so don't think that's all money out of my pocket. This does include dividends reinvested as well, so it's not all money out of my pocket. Total return, $18,471.69. Yes, it's nice to be up. Yes, it's nice to be up 7.2%, but I do not focus on this, and I don't focus on this whenever I'm up, and I don't focus on this whenever I'm down. This is not my main focus. It's nice to see it up, but again, unless I'm selling out of all the positions in my portfolio, it doesn't really mean anything. Current yield 4.239%, and my yield on cost is 4.544. And this, the reason it is circled in red, this is what I focus on. The dividends paid out from all the positions in the portfolio, the annual estimated income, $11,664.71, continues to grow week over week as I add more capital, as the companies in the portfolio pay out dividends, and as they raise their dividends over time. That's what you can see here highlighted in yellow are the companies in the portfolio that have already raised their dividend for the year. So we don't have a lot left. I think we've got Starbucks there. Still, we'll see. They should be raising their dividend here, their next payout. And Verizon should be doing the same. AT&T, they have had a pause on there, so you can see no dividend growth there, so I'm not really expecting anything there. Same thing with Union Pacific. They've had a pause there, so I hope they raise their dividend, but I'm not really expecting anything. Kraft Heinz, same thing. LYB, I need to look at them. They typically do have a raise, so I'm expecting one there. So we've got a few companies we're still expecting some raises before the end of the year, and then a few companies that are still sitting on that zero that I'm not really expecting a raise. But there it is. That's the portfolio update. Let me know. Oh, sorry. Dividend growth year over year sitting at 5.96. There it is. That's the portfolio update for the week. Let me know how your portfolio is doing. What did you buy this week? What did you add? What dividends were paid out? Are you running any options? And how are you doing on options if you are doing so? This has really been a rough year for options. I know I've only been doing options for a couple years, but last year was a much better year in options than this year has been. I mean, I feel like I put 5 to 7 options contracts out every week, and I might get 1, maybe 2 that hit. So it's been a pretty rough year for options, at least for me. Let me know how it's going for you. Would really love to hear from you. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. It is free. It doesn't cost you a thing. It only takes a second. Again, hit that thumbs up, hit that subscribe, hit that notification bell. It really does help out a small YouTube channel like me. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. Again, I do the stock pick of the day video series, so if you have a company you'd like me to cover, drop it in the comment section down below, and I'll try to work it into the rotation on a day it pulls back. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping in today on this Sunday morning. Hope you have a great weekend, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing in educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.